How is it going, guys? And welcome to the first live webinar of Dr. Crypto. In this video, I'm just kind of analyzing the markets, means top down some majors, and then we'll go towards the minors. And if you have any confusion related to some S&Ds, blah blah blah, so you feel to message me. Okay, so before starting the top down analysis, let me know you guys that whenever you're trading smart money, you have to remember one rule. The rule is basically related to Elliott waves. The most guys that know what's Elliott waves. So according to Elliott waves, most of time price moves in a bullish trend, and after taking some bullish moves, price moves in a bearish trend, and again went their direction. Now, what you have to remember that whenever price is in a bullish trend, okay, it will go in some sorts of pullback markets, or you can call it the absorption markets. Okay, so after that it will move again towards the direction, blah blah blah. So you have to identify this model. So this model is basically, you can call it Elliott waves, or you can call it the reaccumulation model, in which I will teach you guys in upcoming videos. Okay, so you have to remember this model because it's so important. Then it will make your analysis really better. Okay, so it means that you can call these impulse retracement names, means you can call it one, second, third, fourth, fifth. After fifth waves, price moves some sorts of correction, you can call it A, B, C. But you don't need to proper name the Elliott's, means you have to mark the first wave, second, third, fourth. No. Whenever you're trading a smart money, you have to only take the idea of the Elliott's and just you have to collide it in the recognition markets. Okay, so these models are really important. Means if structure is bullish, it will go in some sorts of reaccumulation model, and then it will move in its own direction. You have to identify this markets. Okay, so now I'm just starting some sorts of markets, starting from Bitcoin, and then I will just go towards some miners. Okay, so let's start from Bitcoin, and you, if you guys have any problem, you can ask me. Okay, Bitcoin, let's top it down. So in this market, you can clearly see that let's start from 1 week time frame. So you can clearly see that the same methodology, the same model is just happening over here. Means a price was in some sort of bullish trend and it moved in some sort of correction, and now what we can expect, again price will move in this uptrend. Okay, because the structure is overall bullish, it will undergo some sorts of bearish, and after that we have to go in a bullish trend again. So this period you can call it a reaccumulation period. Why? Because in this period price is doing nothing more except taking the liquidities of longs. Why? Because you can clearly see that most of people will long from here, some will take the imbalances from here. So what institution will do, institution will be just kicking them out, and after that it will move in this direction. So what to do here? Here you have to collide the lower time frame, because lower time frame also gives the color to a higher time frame. Okay, so it does not matter that if higher time frame is bullish, in lower time frame you will also go to bullish. No, if the lower time frame is presenting itself overextended markets, so it's just kind of complicated things. I will not go in that depth now because you don't know what's the market of overextend. Okay, so you have to remember only this: whenever structure is bullish, you have to focus more for longs if the lower time frame gives colors to a higher time frame. Okay, so coming to 1 week time frame, 1 week time frame is just kind of bullish. You can clearly see that we were having some shift of fun from here, and after that we got some shift from here, and after that price moved down. So if you give the color to this methodology, it was nothing more except price was in a bullish trend, bullish trend, bullish trend. After that price shifted bearish, again price shifted bullish, and now we are in a bearish trend, and again price shift bullish. So this is nothing more except the model I just taught you guys now. Okay, so now it means that price Bitcoin is just in a kind of reaccumulation model, and we have just bullish trend now. Means structure is shifted bullish once, twice, and now price is in between this range. Means this was a low, this was a protected high, so still the high is protected, and price just tried to wick it out, or to price kind of want to break the structure for third shift, but it did not happen, and now again move down. So wicks are nothing more except a grabbing of liquidity. If you are just trading the real smart money, you have to identify that whenever you are trading, you are marking the zones. You should mark the protected high, protected low, those which are break with the body can closing. Otherwise this is nothing more except absorption. Okay, so now we are just stuck in this low and this high, so still the structure is bullish. Okay, by protecting this low, now we have to shift lower time frame. Why? Because the lower time frame will also give the color to high time frame. Okay, let me mark these zones. This is a protected high, low, and this is a protected high. Okay, okay, let's shift it down. In lower time frame, you can clearly see that price was in a bullish trend, bullish, and shifted bearish. This is nothing more except a reaccumulation model. And now you have to again go for longs, where you can clearly see that you are just stuck in this low and this high. And what is this? Reabsorption. You can call it absorption. Why? Because the wicks are nothing more except a grabbing of liquidity. So it means that this is a low, this is a high, nothing, same thing as 1 week time frame. You have to move it down. Okay, in the lower time frame, 1 day time frame, you can clearly see that price was just kind of bearish market from here, and again shifted bullish from here, shift one. Or you can clearly see that this was a low, and you can argue that this was a high or this was a high, both are fine. So this is some sorts of critical situation in which you have to shift a time frame to see which market or which time frame presents itself best. Remember, the high time frame is still bullish. Okay, so let's shift a bit high. In this time frame, you can clearly see that price was same thing, bullish, and now you can clearly see that this was the recent high, because we were just in doubtful that this is the high or this high. And when you shift to the bullish time frame, you can clearly see that this was our high and this our low. So what is now this situation is very critical. Why? Because price just shifted bullish, or from here, both are fine. This is more good. So we can clearly see that we got a break of structure from here by this low and this high, means this low is still protected. Now what is this? Absorption, wiki market. Okay, and price is still high. This is the recent high. So now if we want to mark a demand zone, you can mark a demand zone for going longs. Remember, the high time frame is bullish, lower time frame is also giving some sort of bullish. Yes. Okay, so this is our good climbing demand zone, and now price just respecting the demand zone and moving in its direction. So what it means? It means that the institutions want to take the price in up direction. So if you want to know to take the confirmation, you have to shift downside. Okay, so if you want to shift downside, you can go at it. 12-hour time frame. Okay, in some 12-hour time frame, you can clearly see that the situation is in a bearish market from here to here. Okay, nice. You can clearly see that you can argue for this high or for this high, both are fine. Yeah, both are fine. This is low and this is high. Okay, so again prices just failed to go high and move in a bearish direction. I think that we just give analysis of Bitcoin when price was here, that we are in a bearish trend, blah blah blah. Maybe now we can clearly see that this was our protected low. Okay, and this was our protected high, and price just break the structure. Amazing. Now you have to make a bias for yourself. Why? Because you have to give the color by collabing the higher time frame and lower time frame. You have to make a mixture. So higher time frame was in the bullish market. Okay, like this. Lower time frame bullish, and when you shift it to a 12-hour time frame, it was in a bearish market. So what it means? It means that it might be more good to go for longs. Why? Because high time frames are bullish, and if you move over here, let's count the dBs. You can clearly see that we are in a bearish trend, only one shift. So fine, just skip that 12-hour time frame because it will kind of okay. 4-hour time frame. Whenever, okay, let me clear you that whenever you're trading the smart money, you have to analyze the market from top to down. Means you have to go from high time frame to 14. Fine. Means you have to go for high time frame and then shift towards low. Okay, and collide the high time frame and lower time frame both and make a bias for yourself. In a 4-hour time frame, you can clearly see that price was in a bullish trend from here, bearish. Sorry, here, shifting bearish, blah blah blah, again, and now we have shifted, I think so, 4 times. Perfect. Price just shifted 4 times, and all of this is nothing more except a cluster. So it's a DB cluster. I will teach you in upcoming videos, and that might be help you. Okay, so we are in a bearish trend according to 4 hour time frame, according to 12 hour time frame. But remember that 2 day time frame, 3 time frame, 1 day time frame, 4 hour time frame, most of time frames are bullish. Okay, so you can go with the intermediate structures. Means this is the situation where you can go longs with the intermediate structures. Why? Because the high time frame is still bullish and low time frame is expecting and giving you some sorts of bullishness. Why? Because if you go here, the market is overextended, means one shift, second, third, fourth, and the price is now overextended. It means that though it's a cluster, but the structure, but the markets are overextended, means 4 dB plus, it's overextended market. You can go for longs. Okay, so that's for night information. From here you can go with. So if I shift more down, so I can go with some sorts of intermediate structures. 1 hour time frame, same thing, stuck from here to here, and you can trade this market as an intermediary. Okay, so if you want to mark an intermediate structure, you can mark it perfectly fine. So okay, so intermediate markets are kind of something else, because I'm not going some doubt. Why? Because whenever you're trading the intermediate structures, you have to take the wicks, but whenever you're marking the real structures, you have to go for the body kind of closings. Okay, so I will just teach you in upcoming videos. So you can clearly see we have shifted once, we have shifted twice, third time, and now price shifted bullish. Perfectly fine. Now if the structure is bullish, means intermediate structure is bullish, high time frame is presenting itself bullish, 2 hour 2 day time frame, price is in demand zone. So what you can expect? You can expect that price may be go upside. Okay, so from here to here makes some sense. Why I'm just marking this low? Because and whenever you're trading the intermediate structures, you have to mark only swings. Okay, swings are fine, and but whenever you are marking the real structures, you have to go for the back kind of boundary closing, which I already, I think so, taught you guys. Okay, so this is basically low and this is high, so it means that intermediate structure is bullish. You can go for some sorts of longs, but from here you can take a long from here. Okay, so it from here means 26,300 zone. You can take a long from here, but maybe price will not reach over here, that's fine. But if price reaches over here, you can take a long from here, because long makes sense from a demand zone. Whenever you're trading smart money, remember 3-step rule: structure, SND, and confirmation. You have marked the structure, you have marked the SND, and now wait for price to reach over here to go for some long side event. And now remember, if the price did not reach over here and moved upside, the zone will be collapsed, moved, and closed. Why? Because the structure is coloring the part, and structure is coloring this SND, means you can go for longs until the structure is not shifted. Okay, so yeah, longs make sense until the low is not broken. Means if you want to go for longs, so you can go for longs by making your invalidation zone till here, because absorption can hunt it. Okay, so you can mark invalidation zone till 26,150, and you can take a trade on 26,300. Yeah, makes sense. Okay, so this move has higher probability to go. Okay, so longs on Bitcoin, fine. Now let's move towards another market. That's, wait a minute. Okay, let's move towards another market, ZO BTC. So ZO BTC is just kinda, yeah, makes sense. So whenever ZO BTC is a bearish, Bitcoin will be in a bullish trend. Whenever ZO is in a bullish market, Bitcoin will be bearish. So these are just correlated and inverted markets. Means if one moves upside, the other will move downside. Okay, so you can go for these, and you can, yeah, you can go for. Okay, by analyzing the gold, you can clearly see that it's in a bearish market. So remember the formula or the method or a reaccumulation model, which I just taught you guys. Now, price in a bearish trend, just revert the chart. Price in a bearish trend, if price moves in a bullish trend, what is this? Reaccumulation redistribution model, and now price will be again in a bearish trend. Okay, so let's see if the formula applies over here or not. So you can clearly see that we have a lot of data over here. Okay, so you can go for here, from here, from here, blah blah blah. You can clearly see that how much data we have over here. Okay, fine. First shift downside, we can clearly see that we got second shift, and we got a third. Fine, market is overextended. Fourth shift, nice. Fifth, and we got a sixth shift over here, and yeah, sixth shift, seventh shift. Okay, it's kind of overextended markets. 8th, ninth, wow, 10th. 10 shifted we got shifts we got in a bearish trend. What is this? This is basically a super extra market that's overextended, means we can go for a long, but you have to identify that now if the market are making some clusters or not. Okay, so you can clearly see that whenever price was recently break the structure from here, you can clearly see that now this was our recently supply zone, and price just hit the supply zone and moved downside again. So you can clearly see that price was in a bearish trend here, and now we have shifted bullish. Perfect, shifted bullish again, we have shifted bearish. Now remember, I just shared a formula with you guys that whenever price is in a bearish trend, it will move in a bullish trend for some sorts of time, but it will again continue in a bearish trend. Now same thing happened over here. Bullish, price shifted bearish once, again bullish, price shifted bearish once and twice. Two times we have shifted bearish. Perfect. Now it's kind of revert of the Bitcoin, means Bitcoin is in a bullish trend, and ZOBTC you can clearly see that is it a bearish trend. So what it means that longs on the Bitcoin are more strong. You can clearly see that shifted once and twice. Okay, so this is our recent high and this is our recent low. If you want to mark the demand zone, you can mark the demand zone over here. This is the supply zone, sorry, you can mark a supply zone over here. So now price is just mitigating the supply zone and showing some sorts of bearishness. So what it means that ZOBTC is a bearish trend. You can go for shorts in ZOBTC, but now you can long the Bitcoin. So both are inverts of each other. Okay, so if a Bitcoin is bullish and ZOBTC is clearly giving you a bearish trend, so it means that high Bitcoin is most probable gonna for high for bullishness. Now you can clearly see that I'm not going down because we are not considered with the ZOBTC. We have to analyze the ZOBTC, so we will get a perfect idea for the Bitcoin. So ZO is bearish, so most probability is to for Bitcoin to go for longs. Okay, so ZO is bearish, Bitcoin is strong for longs. Now coming towards some sorts of miners. Yeah, let's start from TRB. Okay, I'm just analyzing the TRB first, and after that I will just empty analyzing and we'll go with it. So I think so I just analyzed it already. Fine, let's analyze it again. So in this time frame, we can clearly see that we were in a bearish trend, bullish trend, and shifted bearish. Perfect. Shifted bearish once, twice, and again shifted bullish. Perfect. Now we are in a bullish trend. Why? Because first shift came from here, and from where the price shifted bearish, the high is broken. But it means that you can go for longs now. Perfect. So high time frame is giving some good bullishness. Break of structure, you can mark this low, and high is kind of breaking. Okay, nice. 4-day candle closing above this high will make the TRB more strong. Now coming towards 3-day time frame. 3-day time frame is just kind of same, but the break of structure happened from here. You can clearly see that we got a break of structure from here. Okay, break of structure, low, and we are in a high now. Okay, nice. Now I just not marked the break of structure from here. Why? Because these are nothing more except a liquidity grab, and these are absorption, you can call it, or you can call it each and everything. Okay, now remember, I just said before that whenever you are marking the real structures, you have to mark the break of structure by candle body closings. It will help you a lot. Now if I mark the break of structure from here, you can clearly see that I marked break of structure, low, and the price is making the high still. Okay, so it's still going up, so the structure is still bullish. You can go for some sorts of longs. 1-day time frame. 1-day time frame is just kinda bearish. Bullish shifted once and bullish shifted twice. Yup. So the structure has still ability to go for long, but you will long from here? Of course not. In this, at least in this specific time frame, I will not long from here. Obviously, why? Because if you long from here, you have to put your stop loss below this guy. So this will not make any sense because it's nothing more except a gambling. Okay, you have to shift down. If you shift the downside, you can clearly see that you have break of structure. You got a break of structure here, you got a break of structure from here, and twice, and you got a break of structure third time. Now remember that we got a break of structure 3 times and the last one was not a cluster. What it means? It means that the market in this specific time frame is overextended. So a short and a long both make sense, but now you have to shift downside to see that which time frame is giving color to high time frame. Okay, so you have to remember that 12-hour time frame is 3 dB. 3 dB is overextend. Okay, so let's shift downside and see how it happens. 4-hour time frame. Amazing, amazing. You can clearly see that if you count the dB from here, because marking the dBs is so important. Why? Because overextended markets are kind of thing in which if you got a overextended market high time frame or in a bullish market, so in lower time frame if the structure is overextended, it will take some sort of reaccumulation. So these are some things of complicated. I will teach you guys in upcoming videos. Don't take any confusion. Okay, so one shift, second shift, and you got a reaccumulation model. Again, we have shifted once from here, yeah, once, twice, third time, fourth time, and we got a 5 dBs. But remember, we got a 5 dBs and the fifth one was a cluster. Okay, so cluster pushes the market upside. You can clearly see that the cluster pushed the price upside. You can clearly see it over here like this. Cluster pushed the market upside, cluster pushed the market upside. So 4-hour time frame, 5 dBs, and because these are cluster, so the market can push the price upside again. Okay, so this market is kind of ugly, but you can make a bias from here because these are fine because the structure is bullish, so nothing more except this. Okay, nice. 4 time frame, 5 dBs you have to mark it. Okay, 5 dBs, 4-hour time frame, high time frame bullish, lower time frame 4-hour time frame 5 dBs, 12-hour time frame 3 dBs overextended. Okay, so now the lower time frame 1 hour or 2 hour will give some amazing information to us. Okay, if you shifted more down, you can clearly see that we have shifted bullish from here and we shifted bullish again. Okay, 1 hour time frame, 2 shift bullish. Perfect. Now let's make a bias for ourselves. Higher time frame, price shifted bullish like this. Okay, lower time frame, 12-hour time frame is in a overextended market. 4-hour time frame, 5 dBs cluster. 1 hour time frame still bullish. So what you can expect? You can expect that until lower time 1 hour time frame is a bullish trend, you can expect some longs. But if lower time frame means 1 hour time frame shift for 3, then leave it and you can target some shorts. Why? Because all time frame will be bullish. So now you can clearly see that we have shifted bullish. Okay, twice, low, high. Now going long from here roughly makes sense. Yeah, going from long here roughly makes sense. You can mark a long from here by placing your invalidation zone from below this guy. Okay, so yeah, this long, to be honest, from one side, if you want to go in a one side direction, you can mark a long from here by putting your stop loss just below this guy and targeting the recent high or according to your time, your best R. Okay, so 1 hour is still in a 2 dB and you can go for longs, but the limitation is this: if 1 hour shift third time bullish, then leave the longs. Why? Because that 1 hour, if 1 hour shifted third time bullish, so it means that now the structure in most of time frame is bullish, but overextended. What it means? It means that institutions want to take the price towards some correction. So to catch these correction, you can go for shorts then. Why? Because if the structure shifted 3 bullish, then wait for price to shift bearish and take a short from here. Okay, so now as having a one side prediction, you can have a bias from here long by placing your stop loss below this guy, because absorption may kill some most of time. Okay, below this guy, yeah, this is fine, and you can mark your high this. Okay, so yeah, one CRB looks clean for longs until the price has not shift third time. Okay, so yep, this was TRB. Yeah, theory was kind of this: if the price shifted third time, leave it for shorts. Okay, like this. Coming towards next market, let's analyze the MTL. Okay, MTL USDT. Okay, let's start the analysis. Starting from bearishness, perfect. Bearish push, first shift, second shift. Price break the structure? No. Price break the structure? Yes. We got first time a shift bullishness. Perfect. It's a redistribution model and price again push the price downside. Means the institutions again push the price downside. What it means that this was nothing more except a redistribution model. And remember that at the start of the webinar, I just discussed a good reaccumulation or redistribution model for you guys. So that redistribution or reaccumulation model will give you a lot of help. Okay, so we have basically this high, this was a reaccumulation redistribution model. Again we have shifted bearish, perfect. And one shift downside, second shift downside, again we have shifted bullish. So if you shifted again bullish second time, what it means that we have just redistribute first time, redistribute second time. It means that now if we shift again bullish, so the institution will kind of take the price for longs. Okay, so you can clearly see that we have just shifted bullish. Yeah, we have just shifted bullish for second time. The structure is now bullish market. The market is undergoing in a redistribution model. Okay, so shorts and longs both make sense, but we have to give the color by shifting downside. Okay, lower time frame, 1 hour, 1 day time frame, you can clearly see that the price is still in a bullish market. If you want to take some shorts, you have to go for some time frame that should expect bearishness. Okay, so 1 day time frame still in a bullish market. So what it means that the price market has the potential to go for longs. Perfect. Shift downside. 12-hour time frame, kind of in a bullish market, same thing as 1 day time frame. You can clearly see that price is in a bullish trend once, twice, and again shifted bearish. 12-hour is in a bearish trend, but the 12-hour will not make sense because it was a kind of wiki market. Now 4-hour time frame, same thing, shifted bullish from here once, twice, third time, fourth time, and after moving from fourth time, price moved in a reaccumulation model, and now price is in a bearish trend. Perfect. The price is in a bearish trend. High time frame is in a reaccumulation model. 1 day time frame is in a bullish market. 12-hour time frame is in a bearish market. So the market is confusing. That's fine. You can make a one-side prediction by shifting some time frame. You can clearly see that 12-hour 4-hour time frame is in a bearish market from here to here. 12-hour is also in a bearish market, so short will make some sense from here. 1-hour time frame, you can clearly see that price just shifted bearish once, twice, and third time. Nice. Yeah, so shorts on MTL make sense until the invalidation zone has not triggered. You can mark invalidation zone from here like this. You can take a trade short from here by marking your invalidation like this and target like this. Okay, so short makes sense because some high time frames and lower time frames collide with each other. Okay, so short makes sense until 1-hour time frame is not shifted bullish. Okay, if the 1-hour time frame shift bullish, wait for some shorts of bearishness to present itself and again go for shorts. Okay, so that was it for today. Hope you enjoyed some top down analysis and the reaccumulation model that I just drop it down here. Okay, so if you enjoyed, give it a big like, and that was it. Bye.